Hello everyone, welcome. Andria is here. So I have taken over this webinar, so I'm gonna present moving averages today. So it's all about moving averages. We're gonna go in a bit more depth today, a bit more advanced. Anything you need, as usual, I'm here to help. So, as usual, before we start the session, I would like to make sure that you can hear me loud and clear and you can see obviously my screen as well. Until I got some feedback from you, I'm gonna read out loud the disclaimer warning and hopefully we are good to go after that. So let me also upload the PDF version as well for you. I think that's it. Loud and clear, visually perfect. Thank you very much. Thank you very much. Welcome, Nicole. Welcome, Zoran. Just a second to make sure that also the PDF is on. I think it is. Yes, we're good to go. So, this matter is provided as general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee of reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure in our website. So let me double check something. I need to make sure that I have uploaded you the appropriate file. And I didn't. My bad. I'm really sorry for that, guys. It's my bad. Let me upload the proper one. So just a second. I'm sorry for that. Welcome, Brian. Look, I think I haven't seen you few sessions now. Welcome. I'm sorry if you were here, but I missed it. Yeah. Okay. PDF is on. Okay. Good. We're good to go. Perfect. And let's move on. As I said, I've tried to make it a bit more spicy, a bit more advanced moving averages session. So we're good to go. Just briefly explain a bit what moving averages are, just to make sure that everyone over here it's on the same page, that there is no misunderstanding or anyone is new and is not aware of moving averages. Obviously, if you're new, it might not be an appropriate webinar for you, at least if you have never work with moving averages. So hopefully, actually, I'm gonna make a quick question. Can anyone let me know if he's new here and he has never tried moving average before, just to make sure the level of where we're standing actually in regards to the attendees. So until I have a feedback in regards to my question, I'm gonna go through a bit of introduction on the moving averages. So first of all, what they are, okay, it's very simple. It's very simple, and that's why it's the most commonly used, widely used technical analysis tool. I know that I'm saying that for a lot of other indicators, but I think moving average, I might even be able to claim that it's been used from everyone, everyone, excluding obviously price action traders. So moving average, according to its name as well, basically is the average of the prices, of the price actions. Okay, so is a tool. Actually, it's a line. We will see it on the platform in the form of a line. It's a line that connects the average values of our price over a certain period, obviously. So if we're in a daily chart, it will represent the average closing price per day, but connected with a line. Okay, average, moving average, the average closing price over a certain period, okay, connected with a line and representing us the average closing price of the last few sessions, depending on which time frame you are. So for example, over here I have this 200, sorry, day moving average. So that represents the 200 average closing prices, okay, the last 200 average closing prices. So the average closing price of the last 200 days. Crystal clear, I think. So, okay. So it's the statistical analysis and one of the most basic one. So it might be the most basic tool ever. So and why is it important? Exactly because it gives us the average value of the asset that we are investigating, analyzing, and etc. So by giving us the average value, okay, it's like it provides us an indication of how to interpret properly the price movement based on the average value. Okay, so it can be used for any asset class. Okay, either stocks, commodities, cryptos, currency market, everything. It can be used everywhere and in every single time frame. However, you cannot use, let's say, 200 period moving average in a 5 minutes chart. It will give you way too delayed signals. So you need to adjust it based on the time frame that you're using. So yeah, in order not to be too delay and not too early either. Okay, so I need some adjustments based on the time frame that you're using. So in general, you should know that technical analysts, stock market traders, are using moving averages in an enormous number of tools. So many of which will not be possible without their application. So we have seen over the years and based on the webinars that we are providing, that a lot of our indicators have as a base the moving average calculation. Okay, that's why I said it's one of the most basic indicator. Exactly, because it's based on the average value of an asset. So it smooths out the noise. This is the key. It is designed to smooth out the noise created by random price fluctuations that might happen due to news, might happen due to data releases, and so on and so forth. However, I need to clarify at this stage that is a lagging indicator. What I mean by that? Exactly because it's based on the past values, okay? So high, low, open or close prices, or even volume sometimes. And it is designed with this way to smooth out the noise, okay? It's a lagging indicator, exactly because it's based on the past. But as you can see, it has a lot of characteristics, it has a lot of applications. It's not only the fact that it smooths out the noise and give us a value range. The most significant characteristic, in my opinion, is the fact that it can be used to determine support and resistance levels. It can signal a change and a shift on the direction of the trend. It can help to figure out overbought and oversold conditions. It can provide signs of when the market is strong and when it's very weak. It can be used as an entry and exit level. It can be, and then because I said that there are many indicators that they are based on moving average. That's why I put this additional characteristic over here, that center of channels and bands. Remember, Bollinger Bands are the standard deviation of 20 period moving average. So the middle line is a 20 period moving average. A regression channel also. Yeah, so many indicators rely on the theory, on the calculation of moving averages. So let's move on. Yeah, so exactly because, as we said earlier, it's a lagging indicator, because it's called actually lagging indicator exactly because it will respond after the price movement happened, okay, because it's based on the past performance, right, in order to inform us about any shift in the movement, any future changes, any future movements. So they play a key role in the determination of past price trends, but also future price trends. I forgot to mention that over here, because a change on the moving averages behavior, sometimes between them, you might be aware of death cross, golden cross, and etc. These are giving an indication of determining potential future trends. Yeah, so So it might be a lagging indicator because it responds after the price movement happened, but based on what it signals, we might be able to indicate any change. So there are the simple ones, the basic one, which is the symbol, and the exponential. So basically the simple is it's literally the calculation of an average value. So summing up the past values over the days or periods measured. So if we're taking into consideration a 100-day moving average, so we will sum up the closing prices of the previous last 100 days over 100. So this is the simple moving average. The exponential moving average, however, it's a bit more tricky formula. Obviously, you don't need to be aware of it, right? You don't need to be aware of it. Everything is calculated automatically, uh, automatically in our platform. But the exponential moving average is giving us because is based the formula used is used based on an exponential way. So how can I so okay, let me try to simplify it, even though again you don't need to worry about it. You can just rely on the fact that the formula used is basically is a weighted moving average. Okay, basically it's a more, it gives us greater significance of the most recent data points. Okay, I can see a lot of questions coming from Nicole. What would you say determines the most suitable moving average for asset classes and timeframes? What you just said, should we be testing visual? Yes. Wait, I'm saying out loud the questions from Nicole. So first of all, Nicole is asking, what would you say determines the most suitable moving average for asset classes and timeframes? What you just said, should we be testing visually for support and resistance levels? In my question above, I am mindful that perfect is in being flexible of changes in the overall markets over time. Absolutely, you absolutely agree on that. Exponential puts more weight on current price. Okay, one by one. First of all, yes, you need to be flexible. You cannot blindly follow, let's say, moving average, and even though you can see in your platform that it might not give an appropriate support and resistance levels to your asset. Okay, so you need to be flexible. You have to. So for example, over here, okay, I have gold and I have used a 200 exponential moving average, which if I zoom out, I could see that it's not like following really the price. So it's not really helpful. So let me try the simple one. It doesn't mean that it would be a better one, neither. But there is one change right now that back in the end of December and up to here, I will be more precise, up to September, we could see the asset holding, the price actually holding above it. Currently, the asset has turned below it. Still not very helpful. Let's try the 100 simple moving average. Much better. We spotted that the price is above the moving average way earlier than the 200 exponential moving average. Held as a support level in February as well, in May as well. But since then, the asset moved below the moving average, but it looks like the 100 moving average has turned into from a support into a resistance level. So you need to be flexible. You have to basically be flexible because Nothing, nothing can work for every asset class or every time frame. This is the daily gold price. Okay, you can see that I even had to change the parameters. I had 200 and I changed it to 100 simply because the 200 was giving me very delay, and actually it wasn't giving me a key support and resistance levels at all. So, and let me try actually the simple one. This is the simple, sorry. Let me also put on the exponential one to see which one is better for the um, for the gold in a daily chart. So let's see. Crossed together, bullishly crossed, support, support, support. Okay, it gave a closer support than 100, which is pretty logical because it's a smaller time, it's in a smaller scale. Okay, here it was retested and broken 2 times and then extended above it. Clash a bit over here. Oh, what we have? Bearishly cross over here. No. So which one do you think is better in this case, guys? Can someone explain? The 100 simple one, which is in red, or the 100 exponential one, which is in blue? Which one you will be considered using for your gold daily chart? So the blue is exponential, the red is simple. Anyone? The exponential, which is in red, or the simple, sorry, exponential, which is in blue, or the simple, which is in red? I agree with you, Nicole, but I'm not gonna say your reply out loud. I'm waiting for more answers. Kenny, Kevin, well done. Well done, Nicole. You and Kevin are agree, actually. Don't know whether you can see the questions between you. Hopefully not. Anyone else? Anyone else? I guess it might be a matter of perspective, but I think in this case it's quite clear which one is better than the other and which one should be used in this case, whether it should be the simple one or the exponential one. Just got here, apologies for delay. No worries, Steve. So basically I have with blue as an exponential moving average, and with red a simple moving average. Simple moving average, and I was asking which one do you think is better for this particular gold daily chart? Okay, you cannot see the replies, but I just got 2 replies. Guys, anyone else? You're 30 people here, more than 30 people. Anyone? Blue or red? Blue or red? Yeah, blue or red? Aldo, well done. So far, 3 correct questions and none that is wrong one. Blue or red? Blue or red? Simple or exponential? Blue or red? Yeah, I think I did it, Steve. Not this year. I think, yeah, I think I presented an advanced moving average, but definitely not this year. I don't remember whether I presented it once again last year or 2 years ago. I'm not sure. I'm not sure, but yeah, the old one definitely should be on the past webinars page. Yes, so if you cannot stay, don't worry about it. Feel free to go. Anyway, you're gonna get the recording of today's session. Well done, guys. Chris Han also replied, yes, in this case. So this is what you should do. Flexible, test, find out which one it gives you an appropriate support or resistance level. And as you can see, this daily chart, the you could keep both actually, because on the break of the exponential one, you might consider some buying the dip opportunities over here, but the one that it fitted better and it gave us a more appropriate support level initially. Initially for gold, it was the red one, which is the simple moving average. And now the simple moving average, the 100 simple moving average, is converted into a nice resistance level. Okay, a nice resistance level. So you must be flexible. You need to be able to try first what satisfies your time frame and your asset and stick to it. Okay, so find out, determine the most suitable moving average for your asset for the particular time frame. And you see, I didn't only change and shifted from simple to exponential. I also had to change the period. Initially, I had a 201, which was way away from my um, price, without giving me any significant help, at least in the daily chart. So this is a simple one. Let me try the exponential one of 200. A bit better, a bit better. Still though, retested several times, so not really helpful. I'm not sure whether the weekly one might be a better one. So okay, the 200 one, it seems that it satisfies quite well, yeah, quite well the weekly chart rather than the daily one. So be flexible. Okay, so let's move on. Yes, as I was saying, the basic ones are simple exponential. Exponential, as I said, is a type of weighted moving average that places a graded significance on the most recent data points. But as we just show in this example, in this live example of gold, it doesn't necessarily mean that because it's a weighted moving average and it gives a greater significance on the most recent data points, it doesn't necessarily mean that it satisfies properly our chart. So you need to keep the one that you see that it justifies, that it satisfies better your asset and your time frame. Okay. In some cases, exponential moving average helps traders to avoid missing the optimal point to open or close a position. In some other cases, like the one that we just saw, it's just it just, wait, let me just put back the deleter. It doesn't really, it cannot really be used for support for an exit level, let's say, because it was retested several times. But I guess it could be useful for entry points every time that the asset rebounds away from it. So yeah. Okay, let's move on. Something that I would like to add in regards to exponential moving average. Okay, in this case, it wasn't quite helpful, but in some other cases, it might be useful to spot shifts in price movement. So, and I actually, this kind of shift, it might be this one as well. So let me zoom in a bit. I want you to, first of all, I want you to see this crossing. Okay, let me change. Okay, that was, sorry, should be, okay, perfect. Over here, what have I done? Sorry. I I have the exponential, the 100 exponential, and I want the 100 simple as well. Why not? Okay, and I can see over here that they bullishly cross. Okay, so actually, that's very nice. Actually, you know what? Because it was giving us signs of a reversal nearly 2 months in advance. Why I'm saying that? Look at this. Be very quite careful. This is the gold dollar. This is 100, a simple, and 100 exponential. Indeed, the exponential one, it was not really giving us an appropriate support level. Simple does, but the combination of both is giving us bullish and bearish signals. And what I'm actually trend direction. Why I'm saying that? Okay, the wider the two moving average are between them, the more the strong is the trend, right? So over here the downtrend was strong enough because we can see that they were well apart, but at some point they started squeezing, coming close to each other, close to each other, close to each other. This is an indication that something is changing. This indication that the fact that they are very, very close to each other, and they might clash, okay, is an indication that there is a weakness, that the trend is getting weaker. So when a trend is getting weaker, what that means, it means a possible reversal of the overall trend, a the possibility of the existing trend to run out of steam, to have reached its end. And this is indeed what happened. So consolidated a bit on this floor, up, down, up, down. So with the floor, with the 1600 territory being retested 3 times, until eventually rebounded with the two moving averages crossing, bullishly cross. So the 100 exponential one came above the 100 simple one, with 1, 2, 3 huge daily candles. And since then the price stayed above both of them. They tested a bit the exponential one, but stay above them. So that was the fact that they were they were squeezed close to each other, there was an early indication that the trend is changing. So think out of the box. I mean, try stuff. Trade what you see. Don't just, okay, theory is good. We're doing all this theory. We demonstrate stuff because you need to know the basics, because with these basics, you can take them and develop them. Like here, I wasn't actually planning this one. It was by accident. I had called in because I was checking it earlier because I posted a commodity article. And now with you and with Nicole, a question regarding to flexibility and etc. I was just playing a bit, and look what I found. Look what I have. Honestly, I didn't plan this. I didn't knew about this squeeze. So yeah, I'm quite proud for this example out of the blue. So Brian is in 100 exponential and 100 simple one in a daily chart in gold. Brian is asking, can I combine a 10 simple moving average and a 20 exponential moving average together? Yes, why not, if it makes sense? What I mean. So let's shift a bit. Let's go elsewhere. Kiwi. Okay, Kiwi. By the way, is there a particular asset that in time frame that you're thinking of combining those two, Brian? So we could see together right now. So you mentioned 10 simple moving average. So let's put this in green. Okay, and you mentioned 20 exponential. Okay. Oh, I need to change the color actually. Let's put it in yellow, sorry. And I guess for having these short-term time frames, you are referring possibly to a 30 minutes chart, to a 1 hour chart. But can you advise where you're thinking to test them? Because in my Kiwi over here, okay, bam, 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 very close to each other though. Not bad, not good either. It retested the price action is retested it several times, so it doesn't really help me, to be honest. So this is a 10 simple and a 20 exponential. So no, it's not helpful for Kiwi. Oh, 5 minutes chart, a particular asset, or I could use it anywhere. Okay, let's see. So Brian is using it in a 5 minute chart, and let's see if it satisfies my Kiwi over here. Again, not really. Sorry to say that, but not really, because that jump, it happened 1, 2, 3, 4, 5, 6 sessions ago, and the bullish cross came just now. So for my Kiwi, at least in a 5 minute chart, it's not helpful. Um, I will try a 5 with a 10. A 5 and a 10. Let me see. And a 10 exponential. Too tight. Way too tight. Simple. Let me see. Let me play a bit with it. So it posted this bullish cross somewhere here. But they are both simple. And let me try what you said. The smaller, the bigger, the bigger one to be an exponential one. So the bigger one to be an exponential one. Not good, not bad, not bad, not bad. I prefer this one though. I prefer both to be simple, moving averages in this case, but not bad, not bad. 3 and 5 on your Kiwi in a 5 minute chart, Nicole. Simple or exponential ones. So over here, just to sum up a bit, this one is a 5 simple and a 10 simple, isn't it? I'm confused now what I have used. And I kind of like it. So Nicole is asking to try 3 and 5 exponential. Okay, why not? So we'll change the yellow into a 3 exponential and green into a 5 exponential. Not bad. It's not good for moving, for identify support and resistance, but at least I can spot it for identify shifts on the trend. So yes, both. I still prefer the 5 and 10 symbol for Kiwi, simple moving average for Kiwi. But yes, why not? Why not? This is okay as well for using it for entries, not as support and resistance levels, just to spot any bullish or bearish cross. So 5 crossed above 10. So after I would confirm that, we could enter long until they steady. So they keep rising, so there is further steam to the upside. Yeah, but I kind of prefer the 5 and 10. Yes. You agree with me. Nice. Okay, what Brian is saying, let me double check what Brian is saying. Let me change them again. Yeah, a bit more delay one. It was a bit more delay. Wait a minute. Simple. Oh. Okay. Yes, you are 3 and 5. Give me a bullish cross here. That one, it was a bit more delay one, but at least I had a wide space indicating that there is Not bad, not bad. Okay. Yes. So guys, Brian is using it for a euro dollar. Oh no, Steve. Sorry, Steve is saying something. Steven saying, please show euro dollar daily time frame with 20 simple moving averages, please. Yes, of course. Yeah. Testing is key. Indeed, is key because, guys, remember, each asset, regardless if it's a dollar cross, okay, do, Kiwi, so Kiwi dollar, pound dollar, euro dollar, gold dollar, etc. They're all gold crosses, but each one of them has different volume, has different level of volatility. So that's why um, not every single setup satisfy every single dollar cross, for example. So testing is key. I'm not saying to shift and change your mind every single time. No. Okay, now we've seen that we are quite happy with this one for Kiwi 5-minute chart. So you stick with it. You stick with it. I could even stick with what Nicole mentioned earlier, the 3 and 5, but having in mind that the 3 and 5 exponential for the 5-minute chart Kiwi gives me only in signals for changing of the trend and not entry levels or exit levels. Okay, so you initially test, and until you find the one that satisfies your asset on the time frame that you prefer, you keep it, you save it. So you pretty much save it in order to have it there every single day. So every afternoon, I'm trying to save what I change in my platform. And I stick to it because I want my setups to remain as it is, not to waste time again. So you mentioned euro dollar. Sorry for the delay. You mentioned euro dollar daily. Yes. Let me clear a bit this mess. Actually, I'm gonna try it here. Is this okay? Daily chart. We want a daily chart, and you mentioned euro dollar daily, and you mentioned Steve 10 and 20 simple moving averages. Okay, let me change this into 10 and 20. 10. Okay. Oops. And 10 and 20. Let's see. Okay. Okay. Not bad at all. Not bad at all. They're both simple, right? Simple. Simple ones. Let me think about it a bit. So we have over here. Okay. A bullish cross. It was a delay on the shift over here. Clashed. A bit of a delay on providing us this jump. Reversed a bit of a delay again on the reversal, but since then, if I just focus on this part, I can see that they are providing us two resistance levels, and they are currently very close to each other, like they are about to signal the end of the downtrend and the development of a new uptrend. So can we rely on it, or is it okay? Obviously they haven't bullishly crossed yet, so I cannot rely on the indication that we're gonna have a possible uptrend. And you know what? I'm gonna add to it and check. Actually, I'm gonna amend them to see the exponential ones. So cross, sideways, 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 bullishly crossed. Still, they gave me a delay reversal signal over here. Bum, 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 correction sideways. Up, 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 up. Stopped, pause, started to slow down. Bearishly cross over here. So that was a nice entry level. A bit delay one, as you can see, but still an entry level. For quite some time until here where they clash, they flatten, but we could that could keep us in, and they resume, and currently they are flat. Dear Steve, I prefer in this case exponential one. Why? Because right now here they have flattened. They're keeping an equal distance between them and they have both flattened, indicating consolidation. Something that we also saw here, and we also saw here. Okay, so that's an indication that it still consolidates and there is not a clear picture of a strong rebound. I will also add on it just to see whether it's a better one, a 51. Okay, in blue. Okay, no, sorry, not a 50, but actually a 5. Let's see. Boom. Ah. Okay, I'm gonna leave the comments on you. What do you think? Everything is exponential, and we have a 5, a 10, and a 20 in a daily chart in euro dollar. What do you think? Shall I keep all of them? Shall I change something? Shall I shift to symbol one? Actually, I'm gonna try symbol one. So okay, we have this, and we have, let me change, actually, let me have also a symbol ones. So 5 simple, okay. 10 is with green symbol, and 20 simple with yellow. Zoom in a bit. Can I put them side by side? Okay, why not? So here is the, let me not confuse, this is the simple, yes. Okay, and this is the, no. This is the exponential one. Side by side. I want your humble, honest opinion. Okay, this is the exponential, this is the simple one, isn't it? Let me double check, I'm confused. Simple and exponential. Which one you think is better in the case of euro dollar daily chart for providing us a change in the come on, a change in the trend, but also some entry levels possibly as well. Anyone? No? I got that last downtrend and think it on verge of reversal. Are you referring? I'm not sure which one you're referring to. Are you referring to this one or just now, the latest one? So Brian's in exponential. Kevin is saying the first one, which is actually my exponential. Yes, Brian and Kevin are saying exponential. Well, I think I did something wrong actually. 20. And I did something wrong. I mixed up the colors. Sorry. Steve is Steve is referring to simple moving average 10 and 20. I got that last downtrend and think it of reversal. Okay. Okay. I prefer as well. I don't know whether it's good to say that, but I will agree with Brian, with Kevin, with Nicole, and Steve. Why not? Steve was saying that he got the last downtrend and think it on the reversal. Okay, yes, fair enough, Steve. Fair enough. Yes. So they are both okay. Okay, just to be clear, both simple. The combination of simple moving average, which is 5, 10, and 20, or the combination of exponential moving average 5, 10, and 20. They're okay for this case for both. They are both okay for euro dollar daily. The difference, and why all of us, nearly all of us, replied to exponential one, is because it gave us an earlier change of the overall trend. So the 5 over here, they all pause, right? They all pause, and eventually there was a bearish cross of the 5 below the 10, indicating a nice entry level on this beginning of a new downtrend. So it gave us an earlier entry levels. Okay, so that's the difference. Earlier entry levels. Oh, put side by side. Okay, so this is pretty much it. Early indication of a reversal. You see, the 5 already started moving lower and pointing lower here until eventually cross below the 10, confirming the start of a new downtrend. And also that was a possible entry point to the downside. Okay, another possible entry, the cross of the 5 below the 20, an even better confirmation of this strong downtrend that lasted for nearly 2 months. And with exit levels or partial exit levels, the clash or the cross of the 5 back to the 10 or even 20. So here that we have seen the 5 touching again the 10, not crossing it, it just touch it. Here we could have some partial close of our position, locking with this way some profits. Okay, 50%, 60%, 70%, even an 80%, and remaining with the rest of the 30% to see whether it will indeed resume downtrend or whether it was the end of the downtrend. Now, after that, we see that there was a resumption of the downtrend. So the rest of your position will remain open until you spot another clash, which happened here, and you will have benefited, or actually all this journey. So in this case, they both work just fine. It's just the difference is that the first, the simple one, gives some a bit of a more delay, let's say, entry levels. Okay, but that's pretty much it. Okay, that's the only argument. They are, in this case, they both work beautifully. Yeah, that's my only argument. They are wonderful for long trends, right? Yeah, in this case, yes, it seems there are. In this case, it seems that they are beautiful. They're actually beautiful. 3 moving average might be a bit confusing for new people, but in this case, in this precise example that Steve brought up, the euro dollar, it's just a beauty. It's just a beauty. I'm really glad for today's examples, actually, even though I'm quite sad that we didn't actually we went through our webinar and it's been already an hour, and I was just on the second slide, but I prefer this quality of seeing simple and exponential movies and averages, basic moving average in practice, and I could resume the webinar again in November, and keeping it and taking it from the where we left it today. I don't know if you agree with me, but I enjoy really the interaction with you guys, even for the basics, for a simple moving average and exponential, and seeing how it works with the daily euro dollar, with the gold, with the kiwi, with the 5 minutes, with the daily chart, etc., rather than going through all this theory and seeing more advanced moving averages. Can I check a bit? Can I go through it, or I don't know what to do right now. Shall I end the session or try at least to cover a bit more, or just say, yeah, these are a bit more complex. You know what? I don't want to go through it. I'm gonna cover all these advanced moving averages next time. I will include it in November's webinar. I prefer to stay here and have with you another example if you want me to do it, something that you're thinking, another cross, another combination that you want us to analyze together, rather than start the theory and going back and see more advanced ones, weighted ones, moving ones, um, um, and centered ones, having moving average, volume moving average, etc. I don't know whether you agree or not, but yes, this is what I'm gonna do. I'm gonna add in the November's schedule the advanced moving average that we didn't actually went through today, and I will stay for a bit longer. 5-10 minutes is up to you, basically, a bit longer on the platform, with anything you want me to cover, another combination of moving averages, another asset, up to you guys. I'm waiting for comments. Yes, Chris Annis agrees with me. Nicole agrees with me as well in regards to the more advanced moving averages. So yeah, I'm here. I'm here waiting for any other asset and combination that you would like to. Uh, And you know what? I'm gonna save this. I loved it. I'm gonna save it to have it for tomorrow because I'm very curious to see the crossing of euro dollar. Sorry, not like that. I'm gonna save the entire profile with the name Andria. uh, dollar cat, 1 hour, simple. 5 exponential and 8. Okay, sorry, 5 simple, 1 exponential, 8 one. Okay, nice. Let's move on. So put it in 1 hour, and let's have a combo of 5 and 8. 5 simple. This is what Nicole said. And 8 exponential. Let me see. Let me do this is the 1 hour chart. A bit thicker. Okay. Don't like it. I don't like it. I'm sorry, Nicole. Something is wrong today. Oh, it might work for a 30 minutes one though. I will try what you said earlier with the 3. Way too tight. No, it's way too tight, way too tight. I put a 9. Okay, let's zoom in. Okay, what we have over here, I shifted to 5 exponential and 9 exponential. Okay, we have a clash here, which is quite okay because it was in a consolidation. It started getting wider and wider and points sharply higher, so that's okay. Wider, both pointing higher. Suddenly over here they clash, so that's a calling of a stop out, not stop out, sorry, a stop loss, a closing for closing position. Nice. A bit sideways, flirting and jumping between them. Then we have a bearish cross, a temporary one. Okay, and still where we are. Okay, up and down, up and down, up and down. And there was a close below both of them here. Still a close below both of them here. Another close below both of them here. Okay, not bad. I changed both into exponential, but I'm still not happy. Okay, I might not be happy because there is a lot of consolidation in the dollar cut. There was a lot of consolidation. Where are we standing right now? So decline faded, a bullish cross here, nice. Started pointing higher, flatten, another resumption higher, and now it's flat. Okay, let me check whether it's better in the 30 minutes or something. Cross, flatten, but then boom, boom, sharp correction, down, boom, sideways, 15, cross, flat, cross, reversed, calling for stop. A bit of a correction, a significant one though. Boom. No. I'm afraid I prefer this setup in a very short time frame, such as 5 minutes chart. Yes, 5 and 9 exponential. Actually, I'm going to get back to Nicole's comment. She suggested the 5 to be a simple one. So let me see. So 5 simple and 9 exponential. So the crossing was here. So entry could have been here, all the way up, flatten, started slowing down. So that could be a calling for closing position somewhere here, or even here where they clash. Yes, Nicole, I don't know if you agree with me, guys, but I will follow the instruction of Nicole, but the only change that I did is instead of 8, I put 9. Okay, so I keep 5 simple moving average and 8 exponential moving average for dollar CAD, but in a 5 minutes chart. Okay, here we can see that there is a delay here, but in the past it worked quite nicely. Yeah, I feel a bit more confident about it, even though there is a bit of a delay. Maybe, how can I fix that? Maybe I could stick back to this both having exponential. Let me just double check. Yeah, yes, guys, both exponential in a 5 minutes chart. Who agrees and who doesn't? Or if you have anything to suggest, but from what we have saw so far, the 5 and 9 exponential, for me at least, from what I see right now, it works better for dollar CAD in a 5 minute chart rather than a 1 hour chart. So I have an entry here. Okay, I have a short entry here. Then I have another long entry here. I have a short entry here. I have a long entry here. Okay, here it was a bit delayed, but all the rest worked just fine. Right now they have flattened a bit, but still they are in a bullish cross. The 5 is above the 9. Yeah, so what do you think? Okay, Aldo, welcome. You're gonna get, okay, he's not here, he left, but he's gonna get a, basically, okay, not exactly, Nicole. You said testing has to consider the movement of the asset during the time of the test, like making sure we got both uptrend and downtrend. They always act weird for consolidation. Yes, they acting weird on ranging, but yes. I mean, okay, we are seeing all these pictures, right? We need to make sure that it's not occasionally giving us appropriate signal and a timely signal. We need to make sure that it does that not occasionally, but often. That's why I rejected the previous setups, because some were a bit delay, some were not every single time. I feel from what I see, even here, I see that that's the best setup, the 5 and 9 exponential, but in a 5 minutes chart. It does look much better on the 5 minutes. Okay, so we agree. Okay, good. Okay, since you mentioned 1 hour chart, why not finding an appropriate setup for the 1 hour chart in the dollar CAD? So why not? So let me clear this mess again. Let me clear it. All these horizontal and non-horizontal lines. Cool. And let's find something that satisfies the 1 hour chart. And I'm gonna take it a bit exponential. Okay, let me zoom out a bit. Let's take it step by step. Okay, it's a bit delay. And I have a 20 and I have a 9. So the entry was here and the entry was here. Okay, and let me try now the simple ones. The cross was a bit delay. Okay, the stop out could have been here, and there was a bearish indication earlier than before. So, okay, look at this. Look at that, guys. Look at that. Okay, there was a bit of a delay on this bullish cross here. Okay, but obviously with such a huge candle, it was pretty obvious that it's gonna last longer. So the candle, the huge body of this candle also mattered over here. But we had a nice stop out level, stop loss, sorry, an exit level here when the 9 came below the 20. But also we had here, look at this beauty. The price started dropping below the 20 period moving average, and in combination with the fact that the 9 was below the 20 and they both started pointing lower. So we had a much earlier entry for a bear market. I kind of like this one. So for the 1 hour chart, I prefer the 9 with the 20 simple ones. And if I have to change something, it might be, let me see. No. Let me see whether I will change the short one to an exponential one. No, actually, I kind of like it. I like the simple ones, 9 and 20 in the 1 hour chart dollar cut. What do you think? I like, okay, yes, we agree. We agree. That's much better. Okay, over here we had a bullish cross, but they are flat. So it seems that it ran out of steam already. So we could have benefited just by spotting that they are getting closer and by just a limited bounce over here, but they're flat. So it seems that they are about to change. Yeah, so guys, that's pretty much it. If there is anything else, let me know now. Otherwise, I will call it a day because we are an hour and 20 minutes live. And actually, I pretty enjoy it today. I don't know for you, but I enjoy it. I really enjoy those examples. I don't know, it was a matter of luck. It was a matter of exchanging ideas. It was a matter of, I don't know what was it, but all this interaction, I think it brought some fruits. Some fruits for gold, for dollar CAD, for euro dollar. I feel very, very nice. I feel very nice. So if you have no other question, thank you so much for showing how we can do this kind of testing. I loved it. I prefer this type of treating between the theory. As always, thank you for your time, Andrea. It's my pleasure, guys. I'm a person that likes discussion, likes exchanging ideas, and actually, this was a pleasure for me as well because you learn from me and I learn from you. It's like an exchange, a constant exchange. So I really appreciate your time as well. I really appreciate. I really I thank you as well from my side. And don't forget, yes, this is a demo, and I'm afraid. So you might see a bit of a different prices in my chart, just because I'm in a demo. I'm not allowed to have a live because I'm an employee of HMFM, as you understand. But yeah, this is a demo one, yes. But yeah, what I wanted I wanted to remind, don't forget how important, especially in the long term, is like in the medium and long term, daily, weekly charts. whether there is a squeeze between the two moving averages, or whether they are getting wider and wider and wider. Okay, because this shows the weakness and the strength of the existing trend. Don't forget this example that we showed earlier with the gold. The fact that they were squeezing since the early August, squeeze, it was an early signal, an advanced signal that the downtrend, my down channel, because it was a channel to be more precise, so it was a channel, the down channel is running out of steam and we might reach the end of it soon. And this is indeed what happened. So always remember, and this was what happened also here. We're close to each other, close, until the end. So the wider the space between them, the stronger the trend is. The more close to each other they are, the more the weakness in the existing trend, with the anticipation of reaching to its end soon. Yes, all of you gonna get a recording, guys. Thank you very, very much for your time. Thank you for your for your engagement and this interaction. And I'm gonna see you again. Actually, is it tomorrow? Let me double check just to confirm from you for you. Let me double check. Where's my calendar? Actually, sorry, is it? Okay. I don't have a scheduled live streaming. It will be an ad hoc one based on the news. So possibly it will be on Thursday, because we're gonna have Fed's Powell speaking as well. Unemployment, Philly Fed as well. So possibly will be on Thursday. But please follow or subscribe our YouTube channel or Facebook channel, or if you have the HFM app, you're gonna get an alert that I'm going live. Okay, you're gonna get a notification that I'm going live. So I'm gonna host one more live this week, but I would like to keep it. I haven't scheduled a precise time, just because I want to see what's going on with the news and the geopolitics and the data. So I will I have it a bit flexible this week. Thursday Fibonacci advanced strategy, that should be something that Otto will yes, that's my friend Otto who is presenting that webinar. I'm referring to live streaming in social media. Yes, Otto is brilliant. Don't you feel free to register on the advanced Fibonacci strategies. Actually, he's gonna go through more than one. So yeah, that's on Otto's webinar held on Thursday at 12 GMT time. So I am referring to a live streaming in the social media. But anyway, as I said, I haven't scheduled it. It depends on the news. So if you have any of the things that I mentioned, Facebook, YouTube, LinkedIn, Twitter, or our HFM app, you're gonna get an alert, you're gonna get a notification. Okay, thank you very much. Take care, because unfortunately the geopolitics are actually, along with mainly the geopolitics, are the key driver this week, along with the earnings. But whatever is going on with that indicates either an escalation of the conflict or an easing of the conflict is what is driving the last 10 days the markets. Okay, that's why we have seen a bit of a relief from the safe havens. We have seen safe havens a bit of an gold, for example. it has found for 3 days in a row this ceiling over here at 1930. Why? Because the announcement that Biden and Blinken are set to visit Israel gives a relief to the a reduced demand on safe havens, because it indicates that there are strong efforts on easing this conflict and avoid any wider escalation of the Middle East crisis. So it seems that the key drivers, or the first driver of the market this week is the headlines and the news in the Middle East front. So stay alert. Put the news on. Or the Twitter is brilliant for news feed. Bloomberg, top news, Reuters, whatever you prefer. Just stay on top of the news, or your just local TV channel, whatever you prefer. Okay. Okay, guys, have a great day ahead. Take care. Don't forget that today we have retail sales from US. Actually, in less than a minute. Actually, in less than a minute. So, I will stay. I will stay just to see how the reaction of the dollar. And after this is out of the table, I'm gonna close the session. So it was a combination of moving average with the live streaming today, apparently. Yeah. So and just to remind you, apparently it's a very promising earnings season this time, with a lot of analysts and economists stating that they will provide further support to the equity market, global equity market, and a pretty solid and strong fourth quarter for the stock market. So have this in mind. 8, 7, 6, 5, 4, 3, 2, 1, and they're out. Come on, come on, come on. Let's see what's going on. Come on, come on, come on. Refresh. Oh, Kevin's out. Okay, Kevin, I'm just waiting for the data, and I'm gonna close it. Retail sales 0.7%. Okay, grow for retail sales. Grow in a monthly reading. Oh my God. 106 already jumped. Let me see. Huge growth. What's going on over here? What's going on? 0.7% growth in the monthly reading. The core also 0.6% grow in the monthly reading as well. Let me see. Let me see. Let me see. So we are clearly seeing boost on the sales. A boost in the sales and not a slowing in the sales. So that could actually keep inflation to the upside. That could keep the inflation to the upside for the US, I'm afraid. So yeah, that's something that is just adding to inflationary pressures. So let me check the breakout, guys. So that's why we've seen an initial boost, even though from what I see in the breakout, let me check the breakout of it. No, still revised higher as well. The previous readings revised higher. So a growth, this is what we are getting from September's readings, a boost on the sales, regardless of the prices in energy, the energy prices. Um, it's like, yeah, it's just calling for inflationary pressure. Yeah. Yeah, Yeah, that was an indeed a surprise, and that could provide support until at least tomorrow, where we're gonna have building permits and further Fed speeches, and until the test the speech from Powell on Thursday might provide some support to the dollar. It's calling for inflationary pressure. It's just adding to the concerns that that December's rate hike might be indeed needed. So guys, I'm gonna call it a date. Keep an eye on the news, keep an eye on the data. Inflation should increase odds for a December rate hike. Yeah, so that's pretty much it. I'm gonna call it a date. Thank you very much for watching. See you again within the week. Okay, thank you. Bye bye. You too, Nicole. Thank you. Bye bye. Bye, Kevin. Bye.